Hello and welcome. Today we are going to take a deep journey into the world of personal finance. This is not just another lecture about numbers or boring financial rules. This is about real life, real money, and real change. If you stay with me until the end, you will not only learn how to manage your money better, but you will also feel inspired to take action and build a financial life that gives you peace, freedom, and choices. Imagine money as water. If you pour water into a bucket with holes, no matter how much you pour, the water will leak out. Many people live exactly like that. They work hard, earn money, but at the end of the month, the bucket is empty. The first step in personal finance is finding and fixing the holes. The holes are unnecessary expenses, bad habits, and uncontrolled debt. Fixing the holes means tracking, budgeting, and being conscious of how money flows. Tracking your spending is like taking an X-ray of your financial health. You may think you know where your money goes, but when you actually track it, surprises appear. That daily coffee, that quick snack, that small online purchase, they add up. If you spend $5 a day on coffee, that is $150 a month, and $1,800 a year. Over 10 years, that could be $18,000. With investment growth, much more. So tracking is not about restriction, it is about awareness. Once you track, the next step is to create a budget. Some people hate the word budget because they think it means sacrifice. But a budget is not about saying no to life. It is about saying yes to what matters most. A budget is like a map. Without it, you wander. With it, you reach your destination faster. One of the easiest budgeting frameworks is the 50-30-20 rule. 50% of your income goes to needs. 30% goes to wants. 20% goes to savings and investments. Debt is a big enemy. Debt can be useful if used wisely. A loan to buy a house can give you stability. A loan for education can increase your earning potential. But consumer debt, especially credit card debt, is toxic. The interest is designed to trap you. If you owe $10,000 on a card with 20% interest, and you only pay the minimum, it can take decades to clear. That is financial slavery. The way out is to stop digging. Do not add new debt. Then choose a repayment strategy. The snowball method builds momentum by clearing the smallest debt first. The avalanche method saves more money by attacking the highest interest rate first. Choose the one you will actually follow. Once debt is under control, you must build an emergency fund. Life is full of storms. A job loss, a medical bill, a car breakdown. These are not rare events. Without a cushion, a small storm becomes a disaster. With an emergency fund, you can handle it calmly. Aim for at least 3 to 6 months of expenses. Put it in a savings account you can access quickly, but separate from daily spending. This is your safety net. After you have an emergency fund, the journey becomes more exciting. Now you can save and invest. Saving keeps money safe. Investing makes money grow. Inflation is a silent thief. If inflation is 3% and your savings earn only 1%, you are losing value every year. That is why investing is essential. Do not be scared. You do not need to be a Wall Street expert. Start simple. Index funds and exchange-traded funds are baskets of stocks that spread risk. Historically, markets grow over time. If you invest consistently, you ride the wave of growth. Compound interest is your secret weapon. Suppose you invest $200 every month starting at age 25, with a 7% annual return. By 65, you will have nearly $500,000. Start 10 years later, you will only have half that. The key is time. Start early. Investing is not only about numbers. It is about goals. Ask yourself, why are you saving and investing? Do you want to buy a house, travel, retire early, or build generational wealth? Attach your money to meaningful goals. Write down your short, medium, and long-term goals. Align your budget and investments with them. Personal finance is not a one-time decision. It is a collection of daily choices. Cook at home, cancel unused subscriptions, compare prices, wait before buying. Automate savings and bills. Pay yourself first. Mindset matters too. Money is just a tool. See it as a partner. Believe you can improve. Celebrate small wins. Also think about income. Cutting costs has limits, but income can grow. Look at your skills. Freelance, start a side hustle, ask for a raise, apply for better jobs. Even an extra $200 a month invested can change your future. Protect yourself with insurance. Understand taxes. Be generous when you can. Remember the steps. Track, budget, control debt. Build emergency fund. Invest. Set goals. Build habits. Grow income. Protect with insurance. If you follow these steps, your financial life will transform. Thank you for spending this time with me. Managing money is not just about getting rich. It is about freedom, security, and purpose. Start today. Your financial freedom is waiting.